Good afternoon, everyone. My name is Paul. I am a nerd, and my wife turned 60 on Thursday, and boy, do I feel old. Well, okay, I'm not that old. I'm not even near that old, but I'm feeling old today. I'm walking slower. I'm tireder. I don't know what to do. Well, maybe we'll talk about tabs and trust accounting and a couple other things, and I'll get over it. Today, we are having our July 2013, see, I even forgot what year it is, July 2013 Tabs 3 virtual user group meeting, which we sometimes affectionately call the water cooler. And today our topics are allocation of fees. We're going to talk about how to set up rules that will let you automatically allocate the payments that are entered into the system according to who the originator is or who the primary timekeeper is or a whole host of other reasons for doing that. I'm going to talk about that, but before I do, Mary Jo is going to talk about integrating Tabs 3 and Trust Accounting. But before we get into that, a little bit of housekeeping. This is our GoToWebinar control panel, which you may or may not be looking at on your screen right now. If you are not looking at it on your screen right now, it may be because you pressed this button right here that looks like an arrow pointing to the right, and that button causes this to slide out of the way. You will want to do that, of course, if this is covering up part of my screen. If it's not, you don't have to worry about getting rid of it. It's only if it's covering things up. When you do slide this out of the way, this button actually then turns into a button with an arrow pointing to the left. And clicking that button again will cause this to come back into focus. You might want it to come back into focus if you are shy but you have a question, meaning you will type your question here, hit send, and Leanne, our humble moderator, will interrupt me or Mary Jo at the appropriate time, give you a chance to get your question answered. She will ask it on your behalf. If, as she is asking it and we are answering it, you find you have follow-up questions, just keep typing them here and hitting send, because Leanne will at that point be monitoring that specifically for you to be sending those follow-up questions. Now, if you have a question and you're not feeling shy, you can also press this button here, which looks like a hand with an arrow pointing upwards in front of it, and it means raise your hand. Same thing will happen. Leanne will wait until it's appropriate to interrupt. She will interrupt, but then instead of reading your question, she will simply unmute you and allow you to ask your question yourself. We'll wait again until we've answered your question. So if you have follow-up questions, just keep asking them, and we will have a conversation with you to get your question answered. And when we're done, we'll mute you back up so you can keep on eating lunch or whatever it is that you're doing in the background there. Now, without any further ado then, we will turn things over to Mary Jo, who is going to talk about integrating Tabs 3 and Trust. Mary Jo?
Okay. Well, the first thing that I want to let you know is you actually have to have the Trust module. So the little safe down here, that little icon you would see over on the right-hand side of your screen or whatever is the Trust module. So you need to have that. And then once you do, there's two settings you have to turn on so that it's actually integrating with Tabs. So the first place you do that is actually in Tabs. You go under the Utilities Maintenance, the Customization, and then under Other Systems, there's a little checkbox here that will allow you to integrate Tabs with the Trust Account module. You can also opt to print the trust balances only on the statements when there's no activity, and also include clients with only a trust balance on the WIP report. So those settings are all under Customization and Tabs. So that's the first place you have to turn it on. And then the second place is actually in the Trust Account module. And again, if we go under Customization, there is a place to integrate with Tabs and GLS. So that has to also be checked. Once you've done that, you can have payments go automatically over to the firm. And I've talked about that in previous webinars, I'm sure, but we'll touch on it really briefly here today. But in Tabs, there's some other settings that you might want to be aware of. First of all, you have to decide, do you want the trust account information to show on the statements? And if you do, you can do that on a matter-by-matter basis. You can turn it on and have the default be that it's on and it's a detail view or summary view, whichever you prefer. We'll look at that. But that is underneath the client. And on the Statement Options tab, there is a place for Trust Integration. And there's a drop down here that will tell you can either do the detail, which is going to show all the individual line items. You made a deposit, you wrote a check, you did this, you did that. All those individual line items will show up. Or you can just say a summary, and it will say your trust account balance is, and it will be whatever that amount is. There's no detail there. So if you don't want them to see all that information, I would use the summary. There are defaults that you can do, again, that is under customization, and you can have that be the default, that it's a detail or trust or summary for every matter, and then you can change it as appropriate. If you don't need to show it on a certain matter, you can change it to none or to no. So if we have a client that has a trust account, they have you need to put money into an IOLTA account, you can go over into the trust module, and that is integrated with Tabs. So any client that you have in Tabs is automatically populated into the trust module. It does not have a trust account opened for them, though, because not all of your matters have trust money. So it waits for you to tell it to open up a trust account. And it's very easy to do. We have a little trust account icon that you click on. I can search for whichever client I already have loaded into Tabs and get their information. So in this case, I do want client number 100. And if I just click that, it knows that here's Michael Larson and all of his information. He already has a trust account set up, but I'll choose somebody that doesn't. When I search my list, I can see anybody here that has a bank account number 1, they already have a trust account set up under bank account number 1. You are able to set up as many bank accounts as you want. So if you have several different IOLTA accounts and you're pulling in different matters, use different trust account bank accounts, you can set those up. And if they don't have a trust account set up, it will just say Tabs. It's waiting for one to be set up. So let's say that Daniel Klein, I want to set up a trust account for him. If I choose that and say OK, it brings all of his information in, and it has a little new over on the right. So I know that he does not have one previously. I'm setting up a brand new trust account for him, and I can put that information here. It brings it right in from Tabs. I can then choose which bank account he's tied to. If I had 10 different IOLTA accounts, I could pick which one I'm going to be depositing his money in or pulling money out of. And then there is a balance tab. Now, I don't recommend that you just come in and put in whatever the balance is. In fact, I think it's turned off on here. You can say that you can't edit that balance. I would make a deposit to put the money in and do that through transactions. But what I do want to point out on this screen is you can choose who the responsible attorney is. Sometimes it's not the primary attorney that's in Tabs, and you want to have a different attorney responsible for this particular trust account. So you can change that. And then you also can look at any activity or things that are going on, and you can set targeted balances to keep a minimum amount in a trust account. So after you've done that and you hit the Save button, you've then opened a trust account for this particular client. So now, or this matter, and it's a matter-by-matter basis. This matter ties directly to the matter in Tabs. So if I go over to our friend Michael Larson and I want to look at what his activity is, or I want to make a deposit or a withdrawal, I can go to the trust account transactions, bring up his account, and he's number 100, and his bank account 1, and I can see that he's got a $10,000 balance in here. We deposited that earlier today to do our test data, and our test information is back in November 15th of 2011, but we put in a deposit of $10,000. This is where you can start moving money in and out. When I do my type, there are only certain types here that we can use. If you're doing deposit, it's always deposit. There's only one way to put the money in, and that is the deposit. If you want to pull money out, you can use the check, the credit card, or the EFT. And I recommend that if it's a check, obviously you're writing a check. If you are doing a credit card, that might be a little bit different in what information you put in. You're obviously not going to have a check number or anything. But the EFT could be for anything else, any other way that you're moving money out. If you're doing a wire transfer or you're calling and transferring the money via the phone, whatever that is, you can use that EFT option. So once you've chosen what kind of a transaction you want, I skip over the check number if I am writing the check. If I'm printing the check. If I'm printing it through the system, I leave this as 0 and I let the system assign the next available number. If I've already written the check and I want to come in later, kind of like our manual check feature, then I would put the check number in. Whatever the date of the transaction is, and then whatever the amount of the check is. If this was a payment to the firm for attorney fees, I can put in a description, and this can be whatever description that you are doing. You can put in a memo line. And if I want this to automatically post to the firm, this is where I would use that firm. We set up a payee called firm. It has all of your information for your address and everything. And when the check prints, it will print your name. But by using the payee of firm, it tells the system that this is a Tabs payment and I want to automatically post it to Tabs. If I didn't want it to post to Tabs, maybe it's attorney fees, but I don't want that payment to go over into Tabs because maybe I'm splitting it between 3 different matters. Remember, it goes matter to matter. This will post to matter 100. But if I have all of the trust matter money under matter 100.00 and I want this check to go to 01, 02, and 03, I can just use the firm, or my attorney computer systems would be my name for mine, write the check out, and then manually go over and split that money. And you can also do that with an EFT if you want to split it between several matters. So firm is if you want it to automatically post dollar for dollar to this matter that you're in, to that matter in Tabs. Otherwise, you put in you type out your full firm name. Once you type in firm, this Tabs3 tab becomes available. If you tried to click on it under any other payee, you can't even click on it. But if you type firm, it's going to want you to click this Tabs3 so you can verify this payment information that you have it under a regular payment. It's going to go over to Tabs and automatically split between fees and costs for this $500. So that's where you can verify that. Once that's done and I save it, that particular check is now ready to be printed. So I could print the check, and once I print it, I guess I should have done it as a manual check. In fact, I think I'll go in and I'll change that to be a manual check so I don't really have to print it. So let me give it a check number 3, and let's go ahead and save that. Did it let me do that? Oh, I've reviewed it. There we go. Save, and now I've got my check number 3. So if I go back into Tabs, I will see underneath Client Manager, if I go into my payments, here's my $500 payment from Trust. It came right over automatically by using firm. Now, if I wanted this to come over and be included on this statement, you have to be careful of your statement dates. When you're cutting off payments on your statement screen for your transactions, and you cut that payment off for the end of the month, let's say. So let's say I was doing statements for June 30th, but I just dated this check July something. It will show up under my payments, but the trust transaction information down below will not be there because it's only going to show the trust transaction information for that particular month. So whatever that is dated, it will show on their next statement. So be careful with your statement or your check dates in Trust when it comes back over to Tabs. So now if I did a generate statements and previewed this information, I'm going to scroll down because my trust integration information is going to show at the bottom. So there's my payment that came in from Trust, posting up at the top, and then here's my trust account information. So I have my opening balance and I have my closing balance. And I don't know what I used for my dates, so, and I don't know if we're on, let me check Michael Larson here. We are on detail. I should see my detail on his. I don't know. My transactions probably passed my statement. We're in sample data, so my I bet it was July. I probably used today's date. So it's not showing any of my information because our transactions are dated today. So let me check my trust. No, they are 11/15, so it thinks that's the statement date. Let me get back into Tabs. Let me do a final statement. Then I can tell it my transactions. It is through 11/15. We'll preview that. It's always fun in sample data when you're using things not in the live system. Yeah, it's still just showing me my retainer balance. We probably have some setting there, but this would actually show all of your individual line items here. And
the one thing we didn't check this morning.
I didn't check that setting on there. So, but this would be, if you were using the summary, this is exactly what it would have on here, the opening and closing, and then if you were using the detail, it would show all those individual transactions. So it does work, I promise. Our sample data did not check all of our settings there. So once that's there, you have that option to see that information on there. Now I've lost my train of thought, Paul. Was there one other thing I wanted to show them?
I don't think so.
There was, right here. Under AR balance on your client manager, you can also get their trust account balance at any time. So if I like Client Manager a lot because I can do so many different things in here. And one of those things is if I wanted to see what their trust balance was, I can just click on the AR balance, and it's right here that I can see that he has $9,500 left in his trust account. So that is, just a fast place to go see their balance. So any questions? No questions, Mary Jo. Okay, Paul, to you.
Okay, I am going to talk about how to divvy up that money once you get it into the system, whether it's a payment that comes in straight from the client or one that's transferred in from trust accounting. Once those payments come into the system, Tabs can divvy them up. We call it receipt allocation, and we do it one of two ways. Now, today we're going to talk about how to set up what are called fee rules, fee compensation rules, and they allow you to take money off the top before the people who actually did the work get credit for what was done. So the two ways are the money that you take off the top. Now, think of this as origination. This is most often what it's used for. And then there's the money that's left over being divided up among the people that actually did the work on the matter. So let's say Michael Larson's case came in, and let's go check and see if he has any fee comp rules. He does. So let's find somebody who doesn't have any. There we go. Andrew Gilbert does not have any fee comp rules. So his case came in, and it was assigned to Paula Martin, but it was originated by Ron Anderson. And let's say not only Ron, but the other attorney in the firm, I don't know who yet, but we'll pick one. They both originated this matter. They both know this client. They convinced him to come in and work with Paula. Paula's going to take care of the case. She's going to do most of the work with Michael Jensen backing her up as an associate. But Ron and another attorney originated it, so they're going to split 30% origination, meaning they each get 15% off the top, and then the remainder is divided up according to who did the work. Now, just as a way of example, let's say that Michael logs 2 hours at $250 an hour, and Paula logs 2 hours at $250 an hour. So we have $1,000 in legal fees. The client gets a bill, they write a check for $1,000, they send it to the firm. Under my example that I've just given you, Ronald will get 15% of that $1,000, which would be $150. We're going to pick Kendra to get the other 15% for origination. That leaves $700 to be split equally between Paula and Michael. And the reason it's split equally is because they both did equal amounts of work, each generating $500 in fees for which this $1,000 check is being paid. Now, the part where Paula and Michael do the work and therefore get a distribution that's proportionally applied based on the amount of work they did for what the payment is being applied to, that happens automatically. Tabs knows who did the work. Tabs knows how to apply that money. And just so you know, and we'll talk about this in 2 months in another virtual user group meeting when we look at how to get receipt allocation information out of the system, just so you know, you can see that information for the whole 100%, and you can also, from a different perspective, see it with the fee comp rules applied, so that you'll see the $300 coming off the top, and then you'll see Paula and Michael splitting what's left over, the $700. So even though we're taking $300 off the top, some firms still like to look at fee compensation for the people who did the work based on the total amount of work as opposed to what's taken off the top. And you can see it from both those perspectives. What we want to do is we want to say that Ronald and what was her name? Kendra, they each get 15% off the top. And the way we do that is we go into fee compensation rules, and we're going to add 2 new rules to this 102.00 matter for Andrew Gilbert. And so the first rule is going to say that Ronald has the originator, gets 15% from all fees for all statements, for all receipts. More on that in a second. We save it, and now we've got the first half of what we're doing here. We're going to go and create another rule that says Kendra, who is the second originator, will also get 15% as an originator for all work that's done for all timekeepers, for all statements, for all payments. Now, here we have it. 15% of everything that comes in the door goes to Ronald. 15% of everything that comes in the door goes to Kendra. Now let's look at this a little bit more deeply. In addition to each of the timekeepers being able to get a split, the firm can also get a split. Sometimes the firm will get credit for 10%. The originators will split 25% of the fees, and then the remainder will be divided among the working timekeepers. So when you're setting up a rule, it can either be for the firm or it can be for a specific timekeeper. In addition, you can identify that they are the primary, secondary, or originating as far as why they're getting this money. I have one firm where they call them client managers and case managers, and they set them up as the primary and the secondary attorney, and the client manager gets credit for 60%, and the case manager gets credit for 40%. And then they print the report from a working timekeeper only perspective to see who actually did the work. So they look at it first as a 60-40 split between the client manager and the case manager, and a working from a different perspective. They look at it from two perspectives. And so they set up one of these as primary and one as secondary. But most of our clients are doing off-the-top fee compensation rules on an originating basis. You can also say that this person with this rule only gets 15% of certain timekeepers. And you can do it both on level or certain timekeepers. So you can say, well, this person, this is Kendra, I believe. Yes, Kendra gets 15% of Michael and Paula, but not 15% of any work that Ronald does. Okay, don't know why you'd want to do that, but you can. We have firms that do this for very specific reasons. You can also say that they get 15% of any work that associates or paralegals or secretaries or law clerks do, but not 15% of any work that a senior partner or a partner does. And that's what you're doing here, where you're defining what timekeepers they're getting. Now, you can further narrow it and say, well, sometimes it's only they get 15% of all payments that come in the first 6 months, or 15% of the payments that come in the first year. And then after that, the people who do the work get credit. Or you can say up to a certain level. For instance, of the first $50,000 in payments that come in, Kendra will get 15%. But after $50,000 in payments, then Kendra no longer gets that 15%. So those are all the different ways that you can set up fee compensation rules for different people. Over here you have the people who are getting the credit, why they're getting the credit, how much on a percentage basis of what timekeepers, and then you have certain dollar ranges and certain date ranges. Now these are applied in a top-down order. So if you happen to have something that totals more than 100%, or you have an odd arrangement and you need to rearrange what order people are in, you have these buttons here to flip somebody. Now in this example, it makes no difference. They're both getting 15% of everything. But you might have that this person gets 15% of all timekeepers, but he also gets an additional 15% of a certain timekeeper. And sometimes you can get to situations that equal more than 100%, and how you order them can be very important. Now one other thing, I'm not going to save these, one other thing is that when you are adding new fee compensation rules, you can create custom rules on a matter-by-matter basis like I just decided, like I just did. But you can also share rules or use shared rules to create a new custom table. So for instance, if this particular client had maybe they're an insurance company and they have thousands of different cases, but they have 3 different scenarios that we split fees on. You could set up 3 different tables, if you will, assigned to 3 different, perhaps, utility type matters, and it can be either under the 102 client or under some utility client. And then you can share those tables. So if I say I want to add a rule, but I want to share somebody else's table, then I just point to the client that's already got a table set up, and it will pull that in. And so I didn't have to share that. I didn't have to set that up from scratch. I just shared that and took it from this existing client, Marcus Phillips. Now you might have an administrative client, maybe client 1.01 is a certain split, .02 is another split. We have a firm that has 72 attorneys, and they have literally hundreds, if not thousands, of different split arrangements, and they have set them all up with a very specific numbering system for their client number so that they can pretty much off the top of their head say, oh, this is a certain split, so it's going to be 1021.004. Now, don't ask me what that means, but they know exactly what that means, and that pulls in the right share. Now, the thing about a share is that if then later on I go and change my splits for this master matter that I'm sharing, they will change for everything that is sharing that table. So you can set up shared tables, shared fee compensation rules tables, and then once you share them, if you change the original, the shares will all change as well. The other side of that is that if instead you say we're going to use an existing table, then we are using this as the basis to create a table for Andrew Gilbert, but then if the original changes, this won't change. I can use it as a starting point, but then make small tweaks, or just use it as a starting point knowing that when this changes later on, this one for Andrew Gilbert won't change. And that is fee compensation rules. Once you've saved these rules, it warns you that it will only apply from that point forward. You cannot set up a rule table and have it be retroactive for the payments that are already in the system. People that are doing this know that payments are allocated when they're entered. And so therefore, if you didn't have rules in place when you entered the payment, it's not going to go back when you create those rules and apply them to payments that were already entered. Now, if you had just entered a payment moments ago and realized you forgot to set the rules up, you can go in and delete that payment because it's still in WIP, and you can set up the fee compensation rules and then re-enter that payment. It will apply. Once you've set up rules, you have this percentages defined note down here that lets you know without having to drill in here, without having to click this button, that you do have rules defined for this particular client. That's fee compensation rules. We will describe that in more detail in 2 meetings, 2 virtual user group meetings in 2 months, how to get that information out. And Mary Jo, that's what we're going to show them in 2 months. Yep. We will show you exactly what reports to run and how to run them in the September virtual user group meeting for Tabs. For those that are curious or inquisitive, you can really just go into Help and Help Topics and search for receipt allocation under Index, and you'll get all sorts of information on the reports that are available to you. And as I said, we'll cover that in 2 months. Do we have any questions, Leanne?
No questions, Paul.
Awesome. That means I either did a good job or everybody's asleep. Next month, we are going to talk about statement comments that can be added to fees and costs and payments so that they show up when you're looking at those items on the screen. They can show up on draft statements. They can show up on WIP reports, but they don't show up on the bill. A lot of firms using these to really intricately describe what they're doing for their own purposes, but not the kind of thing that they want to show up on the bill. Very cool. We're going to show you how to do that. I'm going to talk about that. Mary Jo is going to talk about adding a cost to either a posted or unposted invoice that's already in the system. So writing a check in accounts payable and then going back after the fact to bill that cost within Tabs. Most everybody that is doing that knows how to do it at the time of entry. We're going to talk about how to do it after the fact. Just in case you're curious, the Practice Master Virtual User Group meeting next month will be about using mailing lists in Practice Master and using those for marketing, using Practice Master for marketing, and then how to create those mailing lists. and also adding a new area of practice. Areas of practice are ways to define different sets of data for different types of law. And so Mary Jo is going to talk about how to add a new one. And if you've got a little bit of free time in about 28 minutes, this month's Practice Master Virtual User Group meeting is coming right up at 2 o'clock. And I'm going to talk about processing, creating billable entries en masse from things that you do within Practice Master. And Mary Jo is going to talk about using the timer to keep track of your time. Now, if you're curious about how to find out more about those virtual user group meetings, if you go to our website, on the left you will find a virtual user group meeting link, and underneath it the individual virtual user groups. We have one for World Docs, one for Practice Master, one for Tabs. Clicking on that link will take you to a page that tells you about the one that's coming up, gives you a link to schedule, to sign up for that, register for that particular virtual user group meeting, and also takes you to the recorded sessions that we have going as far back as 3 years ago. So a wealth of information available at attorneycomputersystems.com simply by clicking on the link over to the left for whichever virtual user group meeting you're interested in. That's all I have to say. Hopefully that's all Mary Jo has to say because she's muted and can't talk anymore. Everybody have a good afternoon, and we will see you next week. Bye-bye, or next month. Bye-bye.